Hurry up. Wait, here we go.
Mm-hmm.
All right. Well, good morning, everybody. Thank you for joining us for another edition of our weekly real estate backstory. We do this every single Monday morning, normally at 9, but we're starting a little bit early. We teach a series called Relaunch every couple of weeks. I'm sorry, every couple of months. Sorry, not every couple of weeks. It is a 2-week class. But we just wanted to wait to start a little bit early because that class starts here just a little bit. So this week and next week, you'll see us here a little bit early. We want to start off and kind of have some conversations about some things that's going on in our industry and just kind of clear up some of the misconceptions as well as kind of talk about things. So starting off, the Federal Commission, there is a class action lawsuit that has been approved against National Association of Realtors, Realology, Keller Williams, a couple of other companies. Now, you may hear some folks talking about that and how it has the potential to change how commissions are done for forever kind of thing. And it does have some potential on there. But first of all, it's not here in Georgia. Okay, yeah. This is only in Missouri and Illinois is the only places where this lawsuit really is. And it really goes back to a couple of rules that they have for the governing MLSs there. And we don't have those same rules here the exact same way. Now, that being said, is it also a concern for us? Nationwide, I think it is a concern for us because we need to make sure that, one, we are protecting our buyers agents commissions.
Correct.
But on the other side, the days of saying, hey, we work for free, you don't pay me anything. No longer valid. That's not how this is. And so, the basis of the lawsuit really comes down to sellers are saying, well, I shouldn't have to pay the buyer's commission. And the challenge here is, on one hand, it's always been done that way. And that is kind of true. The other thing is
customary. So.
Yeah, that's definitely part of it. But the other thing is that for most of our buyers, they don't have the funds unless it's included in the loan. The only way it gets included in the loan is if it becomes part of the purchase.
Well, and also seller concession. So this is why the seller concession was so popular at one point, is so that they can pay the commission and,
And now the market has been really, really crazy. So the sellers are kind of getting, I feel like they're kind of going to the extremes here. And so, we need to make sure that we're protecting our buyers, our sellers and our buyers, but without buyer brokerage representation, then we are leaving an entire class of people unrepresented through that.
It became a wild west.
We have family in other countries and there is no buyer representation over there. And so, this is
you're at the mercy of the listing agent and you don't know, there's no balance in check.
Yeah. The other thing is because of that, there is no MLSs in a lot of other countries, things like that. It's just kind of a wild west. So just kind of know that that's kind of going on right now.
Once again, this lawsuit is only in Illinois and also Missouri because the way their MLS policy is, it does not affect Georgia at this point.
Yeah. Now, another thing, news-wise in the real estate world is that FMLS has partnered with another MLS called Stellar MLS in Florida. Now, this is a very interesting, up to now, FMLS partnered with Middle Georgia MLS. And so, we could pull up, here in the Atlanta area, we could pull and look at listings and see listing data and real market data for the real estate, for real estate agents and realtors, the whole back end. Now, it wasn't just consumer facing data. And so we could go and do that. Now, FMLS, which is a really cool thing. On one hand, I'm very cool. I think it's a really neat thing. You can now go in and search, or you will be able to later on this month, be able to start searching for properties in Florida. It's got they currently have about 77,000 agents down there. And so they're going to be adding a lot more opportunities, but it also has the potential. So just because you can look at properties in Florida doesn't mean
you can practice.
Right. Yeah. I know that you might be able to see these now, but don't think that all of a sudden this means, hey, let's go to Florida and sell real estate. You can do referrals out and things like along those lines, but this doesn't give you the access to go and sell and transact business in Florida that way.
And as a realtor, just remember, you also have access with NARPR, which actually has more than just Florida. So as part of being a realtor, that is your benefit in doing so. So this is just a little add-on bonus from FMLS.
I mean, I like I always I'm a big added or fan of more information, more better, but make sure that we're dealing with it responsibly.
Correct.
All right, we kind of want to jump over here and look at where we're at on mortgage rates. And so we finally, after 6 weeks, mortgage rates are steady. Now, on one hand, you're like, okay, they went from 5.11 to 5.10. Hey, it is a flattening, and it's kind of what we're really expecting anyway. A lot of the mortgage servicers anticipated the market raising, and so they kind of beat the market there. And so we'd already kind of been out there on some higher rates for several weeks, if not months now at this point. So it is coming along. But mortgage rates are higher. If you look at it over the long term, we're not ridiculously high at this point.
Well, and I will tell you, mortgage servicer right now are facing a huge decline on financing, and well, actually, majority of it are refi.
Well, we'll talk about
But
that.
as far as the regular application, they are seeing a little downturn on it.
It is a
So
slight down, yeah.
therefore, they gotta keep in line as far as the rates go.
Well, and you may see this, that mortgage demand hit its lowest level since 2018. Yes, but it really is, like Ming said, driven by refi. Refi has literally gone
away.
Yeah.
I mean, come on. I mean, refi at 3%, that was awesome. Some of you guys may have 2.5 because you're excellent credit.
Yeah.
And that is such a huge savings.
Yeah. Now, one thing that I'm not glad to see is that ARMs are back, and they're gaining popularity. And in part because your opening interest rates on adjustable rate mortgages are really low, but remember, they're tied to different indexes. Mm-hmm. And so as these other indexes raise and as inflation impacts other things, this is a risk, and I'm kind of worried here, kind of thing.
Well, homeowners they're betting on, hey, I can do ARM for next year or two, and then the interest rate will come down. What they don't realize with the ARM rate, as Alan was saying earlier, as the index fluctuate, so does the ARM rate. And so if it fluctuates negatively, they will experience a much higher interest rate.
Well, adjustable rate mortgages took up almost 10% of the market last week, or last month. And so it is already 3 times higher than it's been for the last forever.
And the reason being is that, for every point, as we have discussed in the past, every point of interest rise is a $50,000 purchase power loss.
Yeah.
So this is why a ARM rate is so popular right now, because the home buyer income to debt ratio cannot exceed certain
But warn them,
price.
Please warn them.
Please do warn your client to have alternative exit strategy, so to speak.
Now, be prepared to show some love to your lenders right now, because the lenders are kind of going through a little bit of culture shock. All those lenders that basically lived off refis right now, suddenly we are incredibly popular again. Rocket Mortgage, Wells Fargo are eyeing different buyouts, layoffs. They're both laying off people, things like that. So for those lenders and loan officers that have been working with real estate agents for all this time, they are our best friends right now. And so, that whole piece of their business is really, really dried up. And so just show them some love too. The folks that have looked out for you, look out for them as well.
Absolutely.
So why shouldn't you wait to buy a house though? So this is what you're looking at. This is from the Fred, and this shows, this is the average sale price of homes sold in the United States. And so this goes all the way back from 1965. And so the first thing is that no matter what, we're still going to have long-term appreciation. You can see that since the COVID recession hit, that prices have gone up even greater. But long-term, if you wait, you're always going to end up paying more eventually here. And
yes, usually sometimes the market may dip here and there, but it's never dipping below what the original value. So for example, look at 2000, where the graph is. Nowhere, even when the market dipped, nowhere are we near that price point.
And if you look back at the last recession in the 2007, 2008 timeframe, that came right back up within a few number of years, and you can definitely see that same trend going forward. The other thing is that mortgage rates aren't done going up, and so property value is going to continue to increase. If you wait, you're going to pay more, and the mortgages are going to cost you more as well.
Absolutely.
The other thing here is that guess what? Rents rose to their highest levels ever in 2021, and they're rising even faster in 2022. So you can see that, kind of what is the rent growth by April through, for the last 4 years. And you can see that it is absolutely astronomical. Rents are hammering our renters right now. And so, that's why we see so many people moving into the investor
own properties,
yeah.
and also townhomes, and also apartments.
Yep. So, but now, all that being said, our buyers are still really, really hopeful. And so there was a new study out that said, they asked, are you confident that you'll buy a home, that the next 3 months will be a good time to buy a home? And so we had about 20% agree, or strongly disagree, or strongly agree. But overall, over half felt like it was still a really good time to buy a home in the next 3 months. So even though we see a lot of other things going on, it's still a good time to buy. And so we shouldn't just, I keep seeing agents train, we'll just wait. We'll just wait.
Please don't wait.
Please don't wait. It's going to cost your clients money. We're not looking at property values declining. We are looking at the number of sales slowing down, but not at values dropping.
And it's not because the sales are slowing down because where we are. The sales are slowing down because, like any buyer, sellers got to purchase a property in order to sell theirs.
Bank of America went out and did a survey with home buyers and said, how quickly are you looking to act? And so 65% say that they're going to place an offer within 3 days on a property. 20% so they're going to put an offer on that property right now. Despite that, they're going through, our buyers are going through a lot of steps, saving for it, and they're trying to actually stay on their original timeline. About 40% are still shooting for that timeline. Almost 10% are trying to speed it up because they know
the interest rate's going up.
It is, absolutely. And so at the same time, millennials are kind of doing things on their own scale here, kind of thing. About half of the millennials are delaying, and we've seen that from the millennial generation. They've already delayed more than earlier generations, and they're okay with delaying it.
And that's because they know in today's competitive market, they got to save more money and put money down.
But over half of them are also increasing their budget. And so we see that already, that even though millennials are coming as first-time buyers, sometimes they're moving in to move up properties, kind of thing. They will sacrifice their preferred location. If our millennials are becoming much more flexible.
Yep. For them, move-in ready is more desirable. And sometimes the way they look at it, they're not having kids anytime soon. So therefore, they're okay not being a great school district and stuff like that. As long as they're home.
But the other weird thing with millennials is about half of millennials are trying to find their forever home. Only about 30% plan on buying a starter home. 46% of millennials say that, this is going to be the home we have forever. And I think that's a great goal, but I don't think it's necessarily, that's not what you see really happen for most folks, kind of thing. But that is, so they're willing to wait to find that home that they really want to go. Now, the economy, there's some new data out that said the economy is going to shrink in the first, or did shrink in the first quarter. So that means that we, in housing, because we went through 2008 and 2009 and all that, a lot of times we think that if there was a recession, or if there was a downturn in economic domestic output, that's going to make the housing market collapse. Housing is tied to supply versus demand. So even though you see this, yes, it can affect the overall market for sure, but that is not, don't look at this if we do go into a slight recession. I actually expect us to be back up into the blue the second quarter. A lot of that was supply chain issues and things like that, but it just just to kind of understand, and don't let people be like, oh, well, the housing market's going to be going down. We're waiting on a crash. We're not seeing anything. Yeah, we're not seeing a crash.
Demand's still high.
So according to NAR, we got a more normalized housing market coming out. And so let's run through why that is. So first thing is that pending home sales are down 1.2% month to month, 8.2% year to year. So that's our pending home sales. At the same time, new construction down almost 9% month over month and down 12% from last year.
So this is an indication that where some of our inventory, the lack of it is because new construction has not been able to keep up. And a lot of that has to do with supplies.
Yep.
So if you look at resale, it doesn't impact resale.
And so you can see this is our existing home sales, and you can see that, since we've been kind of slowing down on the number of sales since January already. In January and February, we're on fire, and we were even, and we still had real historically low interest rates in January, but still since then our number of transactions have been going down. What hasn't been going down? Prices. So you can see that the median sale price of existing homes here in the South, from 21 to 22, the average price here in the South went from $280,000 to $340,000.
$50,000 increase. That's huge.
And that's what we saw here in Georgia was a $50,000. The average, the median price point home increased in value by $50,000 here in Georgia. Now, when we say markets are starting to normalize, look what's happening to inventory. Right?
It's coming up a little bit.
It's coming up a little bit, and so like. That's going to be one of those things that we are starting to see. Now, you are also going to start seeing in the news, home prices are falling. Home prices are falling. And so are there markets in the U.S. where home prices are falling? Yes.
Absolutely.
Is it in the Sun Belt? Is it here where we are in Georgia? Nope. Notice there's nothing in Georgia in here kind of thing. Memphis, Tennessee is the closest thing we've got other than Richmond, Virginia. And both of those are a long way away from us here. So, we're not looking at the Sun Belt really taking that. The CoreLogic came out and they shared the odds of a home price decline. And they did this whole interactive map of these are all the markets in the United States. And so I pulled up the Atlanta Sandy Springs, which is, the Atlanta market. And the odds of a regional home price dropping over the coming year,
it's very low.
It is very low. Now, at the same time, in the same study, guess what they said? They said, hey, how overvalued, undervalued is your market? And so guess what? We're also listed as being overvalued. So we do see this thing flattening out, but we don't see the thing dropping. At the same time, we have to, there was a new study out that said, as a home seller, what are you expecting to happen during the sale? 43% of our sellers are expecting above offer asking prices. This is going to be a really interesting time over the next several months for our sellers right now, because for a couple of years now, the sellers held all the cards. There was really historically low inventory. Everyone was fighting to get homes, that kind of stuff. The sellers are going to start to lose some of their power. It's going to be a shift. We are leading into a more normalized market. So the idea of the seller, like, well, I'm not doing closeouts, and I'm not doing repairs, and I'm not doing it, and I want, and almost half of them expect over asking prices and that kind of stuff. That's not going to be realistic. As listing agents, we have to make sure we're preparing them, or else, guess what? They're going to be coming to you. They're going to be looking to you about, why aren't you selling my home? What did you do wrong? They're going to blame us.
So you better research your seller and let them know what the market's doing and what potentially can happen. And if your property has been shown for the last 2 weeks when it come on the market, a lot, but no offers, is an indication that the general public do not believe your product is worth the valuation that you're putting on the house. Yeah. Or if you have no showing at all, that's another indication. In today's market, there's no reason for any inventory to sit still for a long time.
Well, and if you look at this whole list, they're like 42% want to get more than their asking price. 36% said they're going to be able to better negotiate. 31% said their appraisals going to come back higher. 30% want to expect a bidding war.
Right.
Expect it.
So once again, seller has been somewhat spoiled for the last 2 years. And that is going to come to Now, I'm not saying to an end, but it's coming to a halt. You will still have some.
I'm not sure
and
how,
some.
it's gonna be a more balanced.
Yeah, you still will have some property, just because the agent was smart and listing it correctly and give the seller the good advice about what to do and what not to do in their home to get the best value.
Yes. Now, changing gears here, Atlanta has cracked down on Airbnb licensing, and they're limiting rentals in the city. In the city of Atlanta, you can only own 2 Airbnbs, 2 VRBO rentals kind of thing. And now for you guys or for your clients, and if you have folks who are looking to do Airbnb rentals and buy property to do that inside this in Atlanta, first of all, it's $150 a year permit. You can only have 2, and one needs to be listed as your primary residence. You don't have to actually have it as a primary residence, but you do need listed as your primary residence.
With the city.
And you have to inform your neighbors because it's going to impact them. And, it's going to have an 8% hotel motel tax. Your permit number has to be on all your listings. They're going to be going through Airbnb and VRBO and that kind of stuff.
And they will charge you $500 for violation.
Yes, and if you get more than 3, they're pulling your permit for a year. So just an FYI out there.
So please talk to your Airbnb for the one that you do have it and see what kind of impact this law has made on your client.
Now expect that a lot of times things filter out from Atlanta out. So I know of only Atlanta doing this right now, but would it surprise me if we don't start to seeing outlining cities and even some counties starting to do similar things, in part because it's going to be a revenue stream for them.
Once again, this is the city of Atlanta right now, so it's a short-term ordinance that was approved.
Expect to see that outside there, though. So home prices are the only thing rising. Closing costs have been going up. Right now, for the last year, closing costs are up 13.4%. All right, and so it's just making it that much tougher especially on our first-time buyers. We've got higher mortgage rates, higher property values, and now closing costs are going up. And I only say that just to make sure that you are preparing your clients. We used to just throw some numbers out. It's going to be this much. It's going to be this much. They're going up now. Part of it is because it's based on the sale price,
right?
For sure. But just expect that those prices are going up as well. Now, not only like residential real estate, land has had its best year in a decade, kind of thing. So you can see kind of what's gone on with land sales for the last 3 or 4 years here. They're really starting to shoot up, and gosh, if you look, land is right now a very hot commodity right now.
Well, and that's because a lot of builders are still building, and guess what? All the PVC farm, all those property was bought up earlier on, and now they have no more final platted lots.
Well,
and to develop a lot, that's a 2 to 3 year development plus permitting and everything else. So yes, this is why they're now acquiring land in order to think ahead.
Well, but look what's the number 1 category in commercial real estate right now. Land. Land is beating out single family rentals. It's beating out industrial flex, all that kind of stuff. Land is number 1 category in the commercial realm. Now, as far as where in the United States, guess what? Top 5 markets: Texas, Florida, California, Georgia, and Arizona. So we're in the top 5 right there. And so, gosh, take a walk, go for a drive. You'll see the number of land transactions going on. All right, Zillow is looking at changing around their Premier Agent program. Now, Zillow here in the Atlanta area has had Zillow Flex for quite a while, but they've also had Zillow Premier Agent. Well, they are in the process. So they got 2 test markets where they're going in, and they are completely killing Premier Agent, like gone. And they're going to their Zillow Flex program, which actually has a little bit lower split than some of their other ones right now. So it's going to be interesting to see what it goes. But the thought process is they're going to be changing this throughout the entire country. So if you are a Zillow Premier Agent, if you're buying zip codes and things like that right now, expect that you need to be ready to position your business, or you're going to start seeing increased costs. it used to be you could spend $1,000, $2,000, buy zip code, you're going to get this number of leads and you're going to convert them. Well, now if you want a Zillow lead, it's only going to be based on
The flex plan,
the
which
flex
is
plan.
percentage of your commission.
Yep. Now, why do we hate our neighbors? And I know that's look, I didn't come up with a survey, but there is this survey about this is the reasons why Americans dislike their neighbors. Almost a third of them say that their neighbors give off a weird vibe kind of thing. Sometimes they're too loud, too rude. They don't like their pets, things like that. So, the thing I found really interesting was, we were just talking about short-term rentals and VRBO. That's only 3%. People only hate their neighbors if they do VRBO 3% of the time. But if you're weird or goofy, we don't like you at all then.
Yeah, that's disliking.
Now, would you move for that? Almost 11% of Americans have moved because they don't like their neighbors. Come on, y'all, really? Now, 62% say, nah, I wouldn't even think about it. But then, and
27% say they consider.
Yeah, I kind of hate it on there. Now, on the positive side, homeowners have more friends than renters do. So, that's another yay for homeownership. But what do we really hate? We want our neighbors to have similar political views to us. So when you drive through that neighborhood, you'll notice, and we kind of see that you drive through a neighborhood, and a lot of all the political leanings tend to be one way or another, and that's just kind of how people like it. So, anyways, that was interesting. Has very little to do with real estate. Training this week, I'm going to be teaching relaunch here in the Fayetteville office Monday, Wednesday, and Friday this week. Also on Wednesday, we have Wind Down Wednesday. And so we're going to be having a little bit of vino, and we're going to be writing a letter to our future selves, which can be very interesting. On Thursday, I'm doing Contracts 101 over in our McDonough office.
And we're doing Cinco de Mayo, so come join us.
Tacos and contracts and margaritas. We'll do the margaritas after the contracts. Yes, absolutely. So great. Well, hope you guys have a great week. If we can be of any service, please let us know.
Thank you. Have a great Monday.